future of big data in finance is poised for rapid advancement as new technologies, markets, and integrations reshape the landscape. Financial institutions and tech companies alike are exploring novel ways to leverage data for enhanced decision-making, strategic planning, and global operations. Key areas of focus include emerging markets and services, cross-industry integration, overcoming big data challenges, forward-thinking strategic planning, and managing impacts on global finance. Understanding these trends is essential for organizations looking to remain competitive in an increasingly data-driven world. Potential new markets and services. As big data capabilities continue to grow, so do the potential markets and services it enables. In areas like augmented reality, AR, and virtual reality, VR, data-driven solutions are expanding beyond entertainment to influence sectors such as retail, real estate, and education. For instance, AR in retail lets customers visualize products in their homes before purchase, creating a more interactive shopping experience that reduces return rates. Similarly, VR in real estate provides virtual property tours, making remote viewing accessible and broadening the customer base. Green technology is another major market, fueled by growing environmental awareness and regulatory incentives. Investment in electric vehicles, EVs, renewable energy sources, and sustainable manufacturing processes is rising, driven by consumer demand for eco-friendly alternatives. Financial services tailored to support green initiatives offer new revenue streams, as many consumers are increasingly willing to support businesses that prioritize sustainability. The healthcare sector is also experiencing rapid transformation with big data applications. Telemedicine and personalized medicine, in particular, are expanding. Telemedicine enables remote consultations and treatment, reducing the need for in-person visits, while personalized medicine uses genetic data to tailor treatments to individual patients. Both developments provide opportunities for companies to secure, store, and analyze sensitive healthcare data effectively. Meanwhile, in finance, the rise of fintech and blockchain-based solutions is transforming traditional banking. Fintech applications offer quick, accessible financial services, while blockchain promises secure, transparent transactions. Together, these technologies open new service areas, such as microfinancing, peer-to-peer lending, and cross-border payments, which are especially appealing in underbanked regions. As internet connectivity expands globally, new markets emerge in previously underserved regions. This digital inclusion offers opportunities for online education, e-commerce, and telehealth services, providing consumers in remote areas with access to services previously unavailable, thereby opening new growth avenues for companies. Integration with other industries. The integration of big data with other industries is creating new opportunities for innovation and efficiency. In the retail sector, retail tech combines traditional shopping with digital enhancements, such as cashierless checkout and personalized digital promotions, catering to consumer demand for a more convenient, customized experience. Healthcare is also benefiting from technological integration. Telemedicine, electronic health records, and AI-driven diagnostic tools help streamline patient care, reduce costs, and improve accessibility. In this way, data integration enables a level of efficiency and accuracy previously unattainable in healthcare, allowing for real-time monitoring and predictive care. The automotive sector's integration with technology through electric vehicles and autonomous driving systems marks a shift not only in car design, but in broader transportation strategies. This integration requires collaboration between automakers, tech companies, and governments to ensure that supportive infrastructure and regulations are in place. Energy companies are increasingly adopting smart grid technology, using data from IoT devices and real-time analytics to manage energy distribution more efficiently. This reduces waste and contributes to sustainability efforts, as smart grids dynamically respond to usage patterns and environmental conditions. Finance, often called fintech, when integrated with technology, has been transformed by AI, blockchain, and mobile applications. Mobile banking, predictive financial models, and blockchain for secure transactions all demonstrate how financial services can become more accessible, efficient, and transparent through data integration. While integration offers clear benefits, it requires significant investment and a shift towards a data-centric culture. Effective integration not only provides organizations with a competitive advantage, but also creates value across interconnected industries, enhancing the overall customer experience. Challenges in future big data applications. As the adoption of big data expands, so do the associated challenges. One of the primary concerns is data privacy and security. With data breaches becoming more common and damaging, organizations are tasked with securing large datasets, especially those containing sensitive information. Regulatory frameworks like GDPR and the California Consumer Privacy Act, CCPA, impose strict data protection requirements, and non-compliance can lead to severe penalties. To ensure security, companies must invest in advanced encryption, secure storage solutions, and regular cybersecurity assessments. Data quality and consistency are also significant concerns. Big data often comes from varied sources, leading to inconsistencies or inaccuracies that can skew analyses and lead to misguided decisions. Organizations must prioritize data validation and cleansing processes to maintain reliable datasets, especially when decisions rely on real-time data. Additionally, integrating big data into existing IT infrastructures poses challenges, as many companies operate on legacy systems not built to handle large, fast-moving data. Upgrading systems can be costly, and organizations must also invest in employee training to bridge skill gaps in data management and analytics. Ethical concerns surrounding big data use are increasingly important. The ability to collect vast amounts of information on individuals raises privacy issues, and there's a risk of bias in data-driven algorithms. For example, biased algorithms can perpetuate discrimination in hiring or lending practices. Organizations must establish clear ethical guidelines and regular audits to ensure data practices are fair and transparent. The sheer volume and speed of data generation also present challenges. Processing high-velocity data requires substantial infrastructure investment, such as high-performance computing and real-time analytics platforms. To address these issues, companies must develop scalable solutions capable of handling the 3 V's of big data: volume, velocity, and variety. Strategic planning for future trends. As data technology evolves, organizations must engage in strategic planning to anticipate and respond to trends effectively. This starts with a thorough understanding of the external environment. Businesses should conduct regular assessments of technological, economic, and regulatory trends using tools like SWOT analysis, strengths, weaknesses, opportunities, threats, to identify opportunities and potential risks. Forecasting plays a crucial role in strategic planning. By examining trends in consumer behavior and technological advancements, organizations can anticipate shifts in market demand and adapt their product offerings accordingly. For instance, as AI and machine learning become integral to business processes, companies that proactively adopt these technologies gain a competitive edge. Flexibility is essential in strategic planning, as market conditions can change quickly. The COVID-19 pandemic, for example, underscored the need for companies to adapt swiftly to unforeseen circumstances. Agile organizations can pivot effectively, whether by reconfiguring supply chains, transitioning to remote work, or launching new digital services. Cross-departmental collaboration enhances strategic planning, ensuring that insights from various business functions contribute to a holistic strategy. Additionally, building external partnerships with research institutions, technology providers, and even competitors can provide additional resources and insights for adapting to industry shifts. An innovative company culture is critical to strategic planning, promoting new ways of thinking and creative problem-solving. Leaders can foster this by supporting initiatives like hackathons, innovation labs, and ongoing learning programs. A flexible, innovation-friendly culture allows companies to explore new ideas and adapt to changes more readily. Monitoring and revising strategic plans as market conditions evolve ensures that businesses stay on track. Regular reviews of key performance indicators, KPIs, tied to strategic initiatives provide valuable feedback, enabling organizations to adjust plans based on performance and market shifts. Impact on global financial markets. The global financial markets are intricately linked to technological advancements, geopolitical shifts, and economic trends. Big data's influence on these markets is profound, shaping everything from trading practices to investment decisions. Digital technology is transforming finance, with blockchain and cryptocurrencies creating entirely new asset classes. Blockchain offers secure, transparent transactions, while cryptocurrencies have gained traction as alternative investments. However, the volatility of these digital assets highlights the importance of regulatory oversight to manage risks and maintain stability. Algorithmic trading, driven by big data, allows trades to be executed at speeds far beyond human capability, increasing market efficiency, but also raising concerns about market stability. High-frequency trading algorithms can amplify market volatility, as seen in events like the 2010 flash crash, when the Dow Jones Industrial Average dropped and quickly recovered within minutes. Geopolitical events, such as trade tensions or conflicts, also impact global markets. Trade disputes between major economies can lead to fluctuations in stock prices, currency values, and commodity markets. Additionally, environmental policies are increasingly affecting global finance, as green investments like renewable energy stocks and green bonds become more popular. The COVID-19 pandemic underscored the interconnectedness of global markets, with significant impacts on supply chains, consumer demand, and financial stability. Governments responded with monetary policies to stabilize markets, but questions remain about the long-term implications of these interventions. The influence of big data on global financial markets is significant and continues to grow. As markets evolve, organizations must adopt adaptable strategies to navigate these shifts, balancing opportunities for growth with risk management and regulatory compliance. The future of big data in finance is driven by innovation, strategic planning, and an evolving understanding of global impacts, with the potential to open new markets, enhance industry integration, and transform financial strategies. Big data presents unparalleled opportunities and challenges. Organizations that strategically plan for emerging trends, prioritize ethical practices, and invest in secure, scalable technologies will be well positioned to thrive in this dynamic, data-driven landscape.